Alrighty, welcome everybody. Welcome traders to our Sunday webinar. Thank you everybody for being here. If you guys are tuning in for your first time, my name is David Schinkel. I am the CEO and founder of Positive Traders. I hold this free Sunday webinar every week where I give my kind of outlook and analysis on the coming week, kind of talk about maybe if there's economic events coming up. We'll look at that right now, and just so everybody can have a general bias, right? It's kind of hard when you don't know which direction to trade. So I like to provide you as many people as I can with kind of a direction and area, interests, areas to buy and sell at throughout the week. So without further ado, guys, let's go ahead and just jump right into it. First things first, I always look at the economic calendar. Let me just reload it so we get the most up-to-date information. So looking at Sunday, actually, there's no more news that's come out today. This is today, guys. Markets just opened. There's actually no more news. This week is pretty light. Keep in mind, we're towards the end of the year. Last week, we did have the very much anticipated FOMC meeting where the Federal Reserve did raise it. Or I'm sorry, that was the week before last where the Federal Reserve raised interest rates. And then the past, guys, this whole end of year has been crazy. We had the U.S. elections at the beginning of November. So markets have been pretty wild towards the end of the year. So looking at this week, Monday, we have a couple things for the Australian dollar and the yen. Now, if you look at that, one thing that's interesting, those are tentative. We'll see if the times change on this. We'll see if this calendar updates. But if it's tentative and it's after 5:30, then that means we know it's going to be sometime after 5:30 and Tuesday, basically. So you don't want to be really trading pairs like that, especially like the yen, if it's tentative. And now, if you guys go on like websites and you guys read like Forex forums, they'll tell you like, okay, well, generally speaking, in the past, even though it's tentative, because this is actually pretty common, guys, the Bank of Japan policy rate being a tentative time. It's like will normally come out at a certain time, and they'll tell you that, so you can kind of convert that to your time zone, and then you have like a general area, usually like a window of about an hour or so that you can kind of cut it down to. But even then, it's still risky to be in a trade. Tuesday is pretty light. We got one thing for the New Zealand dollar. Wednesday, we got something for the US dollar and the New Zealand dollar. Thursday, we've got a couple things. Thursday, this is probably going to be our key risk event this week. Just looking at everything, that and of course the Bank of Japan bank rate, right, or policy rate, however you want to say it. But then, of course, we have the core durable goods, final GDP, and unemployment claims all coming out on Thursday. And then Friday is pretty light as well. Nothing too crazy. Some CAD news and pound news. That being said, guys, if you have been following me, you guys know that my recommendation, if you guys are new and you're getting into trading and you guys are trying to learn about the fundamentals, is go to the office supply store and get one of those little calendars. Usually they sell them for like 6 months at a time, like the beginning of the year and the end of the year, and put it down like for, Thursday, December 22nd, write down the news that's coming out, and then write down the time that it's coming out. And you can convert this whole thing. You guys see up here, it says 5:04, and then down here it's like 5:07, or well, if I refresh it, it'll be the same time. You can change this calendar to your time zone. You just go to forexfactory.com. You can write down all of the different things. And then I usually highlight, the news when it comes out. That way I know, it's not coming up anymore. It's already over with. But it's good to know, guys, you don't want to be in a trade. If you're ever like in a trade, if you're trying to like scalp or you get in a trade, let's say like you don't know, right? Let's say theoretically, right, it's like 6:30 a.m. and you put in a trade on like USD CAD, and then suddenly it spikes in one direction and it doesn't go, you're like, why did it spike? Now you know why. So this can help you prevent and stay out of those spikes and those really volatile times, guys. So let's go ahead. Let's just jump right into the technical analysis. Let's start at the top and work our way down to the bottom. So let me just give you guys a very clear, my bias for this week is still bullish on the dollar. Okay. I think that gold is ultimately going to keep going a little bit lower. I think Euro USD is going to keep going lower. I think USD chafe is going to keep going higher. Okay. I think pound yen is going to keep going higher. I think USD JAPY is going to keep going higher. I think AUD USD is going to keep going lower. I think NZD USD is going to keep going lower. Okay. So, that's kind of like sums it up. Basically, we're going to go through the different pairs, but everything I just said is bullish for the dollar. That's if you guys look at all of the trends, the super trends or the larger trends that we're in right now, you'll see that we're just trading with the larger trends. So starting with gold, of course. Okay, so last week, guys, we broke out of the 61.8% level. We actually created a flag, and then I actually just smashed through it, broke through it, came down. Now we're headed back up. Nothing goes straight down, nothing goes straight up. So we're just doing our classic, everything moves in waves, everything moves in pullbacks. So I would look to guys sell somewhere around this area, guys, the 1140, 1142. And if we actually fib this out on what kind of retracement is, I believe this is it looks like a 50% retracement. Yep. So you guys can see right there. Let me get my marker out. Let me draw out essentially what I believe could happen. So price comes up 50% level and then ultimately look to sell and go lower. Okay, now that doesn't mean that we're just going to get a straight drop. When I draw my line like that, it doesn't necessarily mean something like that. We might not get something as volatile, right? We could come down, work our way up, come back, do something like that. But ultimately, guys, making lower lows, heading towards the 1100 level, and then I would like to buy towards the end of this year into 26 or 2017. I would like to buy gold. If you guys have seen gold's pattern, I'll just throw this on the weekly. I'm not going to go over this. I went over this at the beginning of last week's webinar. You guys can definitely go watch the replay on YouTube. But if you guys go and you guys look at gold on the weekly time frame for the past, it goes back, I think, 5 or 6 years. You'll see that at the beginning of the year, gold always rallies. All right. And that's just what's happened the past 5 or 6 years. So of course, history repeats itself. We have some pretty significant support and resistant lines, some trend lines. Somebody actually pointed this out on last week's premium webinar. I think it might've been Chris. I'm not exactly I can't remember off the top of my head, guys, but shout out to whoever that was in the premium group. And we have some pretty, I know this is kind of confusing, guys. Sorry, we'll delete this. Actually, yeah, we'll delete that. We'll delete that just so you guys can see exactly what we're talking about. All right, so that is hopefully a little bit clear. Let me get my marker out. Let me show you guys. So this is just on the monthly time frame. You guys can see the touches right there and right here. So we still have, if you look at that, we still have a little bit lower to go, right? A little bit lower to go before we touch the trend line and actually test it. And then on the daily, there's also on the monthly, there is that trend line that's holding. And again, I don't really like trend lines on low time frames, but if it makes sense on higher time frames, then we'll definitely go for it. So this is a pivotal area right here, guys. Let me draw out the box for you. Right here. Once we drop a little bit lower, that's kind of where gold is going to decide whether it's going to break and go lower. And that's also a pretty significant level with the 1,000 level. That's a psychological level, or if it's going to bounce off. Now, my speculation would be it's going to bounce off and probably come back up to this wedge where we have on the weekly, also on the daily. Sorry, I'm all over the place, guys. I just want all you guys to all see this and this all to make sense. The charts. Okay. So you guys can see that on the daily, right? This top one right there, and all right there perfectly, right? Held price. So I'd say we're going to stay in this wedge. So this is my prediction, guys. Gold drops down a little bit further and then eventually ends up going up. But still risk to the downside. Definitely solid risk to the downside. You guys see price. It's at, what's it at? 1136. All right. What's down here? This is 1110. This is all basically the 1100, 1110 zone. All right. So that's another 250 to 350 pips lower. Definite risk to the downside. And remember, guys, if you're ever doubting yourself of which way to trade, especially if you guys are long-term traders, right? Like trading 2-3 day positions or week-long positions or whatnot. Trade with the overall trend. You guys see how bearish this is, right? Just look for a solid pullback like it's making right now, right? Look for it to go a little bit higher and then ultimately sell lower. But just continue to trade with the trend. That's the way. I mean, I think that there's just going to be so much more buying on the dollar. So Let's continue moving forward. Dollar index, guys. Dollar index. Okay. Is the dollar index open right now? I believe I don't think it's open on TradingView right now, so we won't skip it, but I believe I don't know which way it's gapped. Let me see. Let me look at Euro USD. Oh, okay. No, Euro USD is open as well. Okay, so never mind. So dollar index, I don't know if it's open or not. Sometimes it opens an hour off. Sometimes the servers for the dollar index is a little bit different. But regardless if it's open or not, just looking at the euro dollar, right? It follows the opposite of the euro dollar. Euro dollar didn't gap it. It's open right now. So dollar index is going to be, even if it's open right now, it's in this zone is what I'm trying to say. Look for buys on the dollar index. Look for it to keep going higher. This is something I'm definitely really proud of too, guys. If you guys have been following me, you guys, all of my webinars, all of the proof is out there, guys. You can go through it. I have webinars. I have like over 80 webinars on YouTube from every single Sunday. I do it every single Sunday, like religiously. And if you guys go back to my webinars from 2 months, 3 months ago, I've been talking about the dollar index for a very long time, breaking its major resistance and going up to 103. And that major resistance that's been broken, you guys can see it on the daily. And I'll show you guys why I've been so adamant to the top side, right? So boom. So when you look at it like that, that makes sense, right? So we have this top right here. But some people would say, in so many people, I can't tell you guys how many people thought it was just going to start coming down. I can't tell you guys how many people have been selling the dollar, right? Just like, oh, it has to come down. It doesn't have to come down, guys, because look at the large trend. Let me show you guys something. Let me open up. So some of you guys that don't use the dollar index and some of you guys that might not understand what this is, this gauges the dollar. It tells you it's a basket that measures the strength of the dollar. So when this is going up, that's good for the dollar, basically. When this is going down, that's bad for the dollar. But look at what this is forming. You guys see this ginormous flag? Oops, I don't know why it doesn't want to let me draw. You guys see this ginormous flag that formed? Pennant, whatever you want to call this, right? This giant flag that actually broke, right? You could either say broke right here, but really it actually broke right here at the top. And now we're heading up higher. And even when we were down in this area, guys, I talked about price breaking this. It had to break it at some point and go up, just continue going higher because of this, the super trend, I call it, right? So that being said, dollar index, if you trade the dollar index, look for it to just drop. It's Sunday, right? You know, the markets are kind of unwinding and kind of just basically unwinding. That's probably the best word to say. So don't expect necessarily Sunday the trends to follow it. And it's always a toss-up. Sometimes it does, sometimes it doesn't. But, you know, just wait for – I don't recommend trading the first, like, couple hours, at least, like, the first 8 hours the markets are open. Definitely sit on the sidelines. And even the first day, I usually don't even trade until Mondays or Tuesdays just because Sundays are kind of sketchy. So wait for any pullbacks, though, and buy. The deeper it goes down for a pullback, that's just a better opportunity to buy. All right. Euro dollar. Remember, euro dollar does the opposite of the dollar index. So I'm looking for a selling opportunity on the euro dollar. This could be the opportunity. I mean, if you look at the dollar index, you guys see right here, we've got this. Watch, I'll pull it back to right here. So you guys kind of see that previous resistance that got broken. Now it's acting as support. Actually tested it right here. You guys can see that wick. So this could be the level where, you know, what we call our PRZ, our potential reversal zone. So it could continue to take off from right there. And that would give pretty good conviction to Euro USD because it doesn't have much, I wouldn't say has much more room to go higher. But again, we could be looking at something like this, guys, before selling. Kind of like with gold, you guys saw the 50% level, right? Let's see what this is at. Same exact thing, basically. You guys see that right there? Remember if you guys follow me also and follow my webinars, you guys know I love using Fibonacci. I love incorporating in it's just something that's a part of my strategy. But out of all the levels on this entire scale, I prefer, you know, the strongest, and that seems to push and reject price the most often, is the 50% level, in my opinion. So we look at that. We look at Euro USD. We have kind of this this area, this zone that you, oops, kind of dropped. Ignore that kind of drop right there. Just the green box and the 50% level. So this could we could see price come up and then continue lower. And again, remember that would actually go very nicely with gold. Don't know why it's not switching, guys. Oh, all right, gold. Oh, sorry, guys. I think the internet connection is weak right now. I'm actually in a hotel doing this webinar, so I'm like running on like 10 megabit per second internet. But just to clarify, guys, remember, so gold and Euro USD, they're both like exactly the same. See, right here, and then watch. Let's go to here. Here's gold. There's Euro USD. So similar, right? See how close they moved? I love correlation trading. See how they look at them on the hourly. They're I don't know. The internet connection is weak. You guys can see there. The technicals are respected. And then inversely, the dollar index does the opposite. Okay? And then USD chafe is just like the dollar index, right? You guys see kind of like that. So gold and Euro USD correlate positively. Dollar index and USD chafe correlate positively. You guys see that? How crazy dollar index and USD chafe look? So if your broker, so here's the thing, guys, here's the key, is if your broker doesn't offer the dollar index, which a lot of brokers don't, or if you don't use TradingView, use USD chafe, because every broker offers USD chafe. We can fib this out too. Watch, this is probably like the 50% level. Boom, that's crazy. Okay, that's actually crazy. All right, so, I mean, we've already broken out of that structure. So, I mean, I would look to buy definitely around this area. You know, look for just a little bit more of a pullback, just like Euro USD. We're waiting for it to get to that 50%. Gold, we're waiting for it to get to that 50%. USD chafe, right? We want to get it to that 50%. And then boom. And then look at that. That's crazy. It's actually mind-blowing that all three pairs on the 50% level on the low time frames are pretty significant levels of like respective support and resistance. It's pretty intense. So definitely, guys, that's some good risk to reward right there. Definitely. So again, you know, wait for it to come down, test this previous resistance that it broke out of, and then ultimately continue buying, guys. You know, I can't make any promises, right? I never make guarantees. So guys, don't take my word for this, right? People are wrong. That's just kind of, you know, I'm not a perfect trader, but I have a very strong feeling that there's going to be another, you know, continuation of the rally on the dollar. And I believe that at some point this week, we'll see all of the pairs that we're going through in their respective directions, making either higher highs or lower lows. So, for example, USD chafe. I have a very strong feeling. I'm pretty confident that USD chafe is going to, you know, at some point end up breaking this high and make it a higher high. And, you know, just like Euro USD, I believe that this low right here will get broken at some point and will make at least some type of new low. All right, that's my very strong feeling this week. Pound dollar, it's very interesting. It could be giving us a good opportunity, guys, but pound dollar has been all over the place. It was stuck in this wedge that we broke out of. You guys know this trend line that we've actually been playing off of for quite a while. The top trend line. Guys, we've been playing off this trend line since back in here. If you guys go through the webinars, when we had a double top right here, we had this trend line here. So we've been having this trend line here for a while. It did break, you know, right here, but then actually when it came back down, you guys can see bounced this zone, right? And then bounced rejection. So this is a very valid trend line. You guys won't see a ton of trend lines on my charts, but the ones that you do make sense. And you guys can see down here, right? And this is on the 4 hour, guys. This is pound dollar on the 4 hour. So just so you guys can have this, if you want to mark this up on your chart too. All right, so this is, and you guys can see how well price respected this. Look at that wedge. was stuck right in it, ended up breaking out last week. Is this going to be the retest? That's kind of the question, guys. Is the pound dollar looking for the retest and going to go lower? Kind of like how Euro USD is going to go lower. And, but that being said, the reason why I'm a little bit hesitant with this pair would be because the pound has been was gaining strength. But this could be an opportunity to sell 50% level. Oops. Previous support right here. So I'll mark it out for you guys. We could see a pop up and then continuing the trend out because we broke out of the wedge, right? We broke out of this area. So now we have, right, because it's either going to go, you guys have to understand the way wedges work. Let me jump out. The way wedges work is that as long, a wedge is only valid when price respects it enough times, right? And that's enough times for this to be called a wedge. So the tighter price gets in, it didn't have to break out here, but the tighter price moves in, right? Eventually that just means that there's going to be, either like that or like that, some very sharp move to the upside or the downside. And right now we're kind of getting that move to the downside, you guys can see. So, but again, it goes back to that thing I always say, guys, sorry if it sounds like a broken record, but remember, nothing moves straight up and nothing moves straight down. So things move in waves. So wave 1, pull back, wave 2, pull back, wave 3, and then we continue our way down. We could be seeing something like that. So that's what my bias on that pair would be. Now, I personally would stay away from the pound dollar, though, guys, because I think pound Jappy is not done. Pound yen, this pair right here, I think it's not done making new highs. I do want to point out a pretty important thing with this pair. If we look at the super trend or this overall kind of high and low, so this is very important. This is a great pair to be trading right now, guys. For any long-term trading, scalping, there's great opportunities. But remember, you have to keep your lot sizes low because this pair moves, pips very quickly. So you guys know that, though. This is the 2015 high, 2016 low. We have it fibbed out. Okay, we broke the 23.6. Now I believe our next destination is right here, the 38.2% level. Okay, that's basically like 152. Is what we're looking at. All right. And where's price at right now? It's basically like 147. All right. So 500 pips potential to the upside still. All right. And that's my bias. Let's look at some opportunities to buy. Now, last week does look kind of suspect. We did have this. There's a couple things. There's like a good side and a bad side. So the bad side was this exhaustion candle that formed, but then the good side was this bullish candle, engulfing candle that rejected just kind of like this formation of the exhaustion. Because normally, guys, right after you see an exhaustion candle, you usually are expecting a drop. We didn't get that because, again, this and USD Jappy are in the strongest trends of 2016, just straight up, guys. You can't find another pair that's trending and pushing higher or faster than any of these two pairs for the whole year. So that being said, any pullbacks buy. Any pullbacks definitely buy. I promise you guys, though, like some of you guys like watch these webinars and then like don't take advantage of them. I promise you guys, like you guys last week, not like watch last week's webinar, guys. Like just watch it for 30 minutes. And price was at 144, 145, and I told everybody that was on the webinar, price is going to 147, 146.50, and it did, or 147, 147.50, and it did. This pair is so bullish. So again, guys, this is another huge shout out this week, right? I'm calling it again. This week we're going to see some new highs made. We're going to see 148, 148.50, 149. We're going to see something, but we're going to keep pushing into the new year. So look for opportunities to buy this pair. Very, very, very bullish on this pair. You guys can see, right? There's some opportunities all over the place. We've got like something right here. Pull back lower. Let's see, is this the 50% level? It probably is. This zone is playing between the 50 and the 61.8. So this area is solid for buying anywhere in here. But look for a long-term buy. Long-term buy, guys. It's still going higher. This is guys, the setup isn't valid anymore. It's still going to go lower, but this actual setup isn't valid. This was given on Wednesdays, or not Wednesday, sorry. I think Thursday's webinar. You guys go back. When I say Thursday's webinar, if you guys, just to touch on that, if you guys are just tuning in and you guys are a part of the free group, I do have a premium group where I give out signals, and I have a daily live session Monday through Thursday for about an hour every day, where I go through all these pairs and we look at trades like this. So this was actually given out on Thursday's webinar when price was still in this area. We look to come up here and then sell. Didn't quite get to the sell zone, but if you took an aggressive seller, you got in early, right? That's a ton. That's like free money right there. And you guys can, if you want to learn more about that, I also have a trade copier that is free. You just get for free for being in the premium group. Like, I trade your account for you. It's a MAM multi-account manager. That's the way we go. So you don't have to worry about downloading anything. It's just completely hands-free, and I have very strict risk management, guys. I don't risk more than 2% per trade. But if you want to learn more about that, just go to the website, positivetraders.us. We're going to USD Jappy right now, Kung Fu. Yeah, FX Choice. And FX Choice is like the best, guys. If you guys are new and you guys are looking for a broker, I definitely don't recommend like FXCM or Oanda or any brokers like that, just because their market, they're regulated and whatnot, and that's the way I would speculate they make a lot of their business, is trying to hype people up on the regulation. But as long as you know what you're doing and you've been in the business for a while, there's reviews. If you guys know Forex Peace Army, that's like the Yelp for broker reviews, so you can go check out other brokers on there. But FX Choice is like a true ECN broker. They're good. I know XM is good. Pepperstone is good. I've heard okay things about Traders Way. I've heard good thing about Forex Brokers Inc. I haven't heard good things about Oanda. I personally have used FXCM and hated them. And Forex.com is also garbage too. But anyways, AUD-USD, I think AUD-USD is going to continue to go lower as well. Sell the pullbacks, guys. Just sell the pullbacks. Very simple. I'm just going to be very quick with this and NZD-USD, because you guys kind of get the picture with all the other pairs, right? We're waiting for a pullback and then buying or selling in their respective direction. But you guys can see why also. It just makes sense. It makes sense. These lines make sense, right? Boom, boom, boom. Broke it, retest. Now we have the major drop. Okay? So, and guys, this is totally 50-50. It doesn't necessarily mean these pairs are going to continue dropping hard. I think this week, just based on, I would personally stay away from AUD-USD and NZD-USD unless they make a big pullback. You guys saw them on Friday. Like, look at the daily candles, guys. Look at these 3 daily candles. That's crazy. That's Friday, Thursday, and Wednesday's candles. Those are some ginormous candles. And we actually had, but you guys can see, right? Look what happened right here. You guys see that exact same thing. History repeats itself. So we didn't have like some extremely volatile drops to the downside after those 3, but we did end up inching lower. And that's what I believe is going to happen with this. I think we're still going to inch just a little bit lower on this before looking for a nice buy. Something like that. USD Jappy, guys. Let's look at this pair. So let's look at the super trend. Let me delete that for a second. And that just for a second. All right. So from just like GBP, JPY, GJ, right? Pound yen. We have the 2015 high to the 2015 low fibbed out. All right, now we have this super bullish trend. We've already broken through the 61.8, right? So we have no more resistance until we get to like this area. So that is where I look for this pair to go next, as long as the dollar continues to strengthen, as long as the trends continue. But you guys can see right here, that's where I would target long-term for price to go, as long as the dollar continues to strengthen. All right, and we'll find out very quickly, guys, this week what the dollar is going to want to do. Oh, and it does look like the dollar index is open because it's changing. So you guys can see it's actually dropping a little bit right now. Right to this zone. That means Euro USD is moving right up as well. You guys can see, right? So they still have some ways to go. That's why when we talk about trading, continuing the trend, right? Don't jump in right away. Don't jump in, because right now what's happening when people talk about market makers, that's what's happening right now. You know, the markets are being made for the week. There's traders, all these new traders and people that want to jump the gun and get in. They see this overall trend and they're like, it has to keep going down. It has to keep going down. So they're selling right now. They're selling. And, you know, they could get lucky. Definitely, they could get lucky. But I'm looking for a better risk to reward. You know, price will probably be up here, probably in like some middle of the London session. So about 12 hours or so. Price could be somewhere up in this area, maybe a little bit longer, but eventually head down lower throughout Tuesday, Wednesday, Thursday. All right, so USD Jappy looked for a pullback and then looked to buy. I actually believe 50% level on this is what we're looking for also. Yep, okay, 50% level as well. So fib out the 50% level on the 1 hour, guys. Look for price to get to it, basically on most pairs right now. And then look to buy or sell in their respective direction. So in this case, look to buy at the 50%. All right, USD CAD. USD CAD, I would still say, guys, I think USD CAD USD CAD is interesting, but ultimately, if our analysis is right with gold continuing lower, Euro USD continuing lower, et cetera, then USD CAD would respectively continue going higher. And that's what I believe could happen. I mean, we are forming, although we have something like, a lot of people saw this, and yes, definitely easy money for a quick scalp. Quick scalp, you know, those of you guys that got in, quick scalp, but some of you guys saw this and took are still holding like a big sell. Cut your profits while you can. Take your profits while you can, right? I think it's going to continue going higher. We're still holding this support down here. We're still making a flag. I mean, we kind of broke out right here, but you guys see what I'm talking about. We got this consolidation zone, you know, consolidate a little bit more and then go up higher. And then respectively, oil would go down further as well. If oil wants to load, let's see. Now, I don't trade oil, so I'm not going to make any recommendations. But generally speaking, if USD CAD is going to go up, oil is going to go down. But you guys can see there's some divergence going on. You guys see oil is actually kind of going up. USD CAD is kind of going up as well. So I would just stay away from oil, guys. There's many fundamentals. Oil has moved, I would have to say, more fundamentally than most other things. So just be very careful with oil. I would stick to just currency pairs this week. Kung Fu, you asked when you recommend we look to short till the 50% zone and then look to long there, especially for USD Jappy. What about the results for Bank of Japan? Or what would the results for Bank of Japan do? Great question, Kung Fu. So you said, like, for an example with USD Jappy, would you recommend to short till the 50% zone, then look to long there? So, you know, that's such something like I don't want to be giving you guys like financial advice like on how to invest. Me personally, right? Like I am not going to sell this pair to catch a few pips to the downside just because the overall trend is higher. Like for me to be interested in shorting this pair, I would have to see something big happen. Like if we look at on the daily, like I'd have to see some very, very, very bearish momentum, to consider that this overall trend is breaking. But, they say that saying, guys, the trend is your friend, and it really is true. Like if you just are patient and trade with the trend, more than 50% of Siri knows many things. Sorry, guys. Pressed my button. Siri popped up. But I promise if you guys trade with the trend all the time, then you're going to win more than 50% of the time. So, of course, remember, guys, that there's not one foolproof way to get rich, right? If there was like one way to get rich, there'd probably be like a textbook on it, and then there wouldn't be jobs. Nobody would have to go to school. Nobody would have to do anything. And everybody would just learn to trade the financial markets, but there's a reason why it's not like that. It's because it's not easy. So that's why I would say trading with the trend, because trying to trade against the trend just kind of, you can do it, but overall it's gonna kill you. Like, let me just give you an example. Like right here, right? Like what if people shorted and they're like, oh, it comes down here. You see this big bearish candle, right? So you like go to bed or whatever. And you're like, or you don't even look at it, you're swing trading. You're like, oh, this has to drop, right? And then this happens, this consolidation, and then you end up getting, stopped out at break even, or you don't move your stop loss to break even, and it ends up hitting your stop with this. You're just trying to catch a couple pips, right? When you could just be looking for better opportunities to be like buying, right? Looking to buy like around down here and then catch all these pips up. So in my head, when I see like this trade, right, like I would rather give up these pips right here to increase my risk to reward to make all of those pips right there. And then with this, you can have a much tighter stop loss too. I mean, right, you don't have to have your stop loss a 1-to-1. You can have like a 1-to-2 risk to reward. You can have your stop loss down there. Whereas a trade like this, you might need 1-to-1 risk to reward. All right. Let's see, guys. Let me look at one thing. Okay. All right. So, and everything's actually moving pretty respectively. Everything's inching towards the 50% right now. Everything's making a pullback. So, right, just have some patience, guys. Wait for the price to get to the 50% level. Look for opportunities. When I say opportunities or signals, that means exhaustion candles, bearish engulfing candles, evening star, something, guys. Waleed, you asked how to read the Forex calculator. Okay, I can do that real quick. I'll just go over it. I'll go over it for just a few moments, guys, because I know all of you guys on here are on different different levels of Forex. So I'll just briefly go over it. So if any economic calendar you look at, you have to be careful about what it says at the top. Make sure you always look, because like on Forex Factory, the way it's set up, it has the actual over here, the forecast right here, and the previous. Sometimes it's like backwards for other websites. So make sure you always read that. Basically what these all this is, to make it simply, it's called macroeconomics. And it is all just a bunch of pieces of news and reports and statements and measurements and everything that basically measures the strength of economy for a currency, right? And a lot of it doesn't matter, right? To be honest, a lot of it doesn't matter. Any yellow thing really doesn't matter, okay? It's not really going to move the markets. Medium doesn't even really matter that much, okay? The high risk is really what you're interested in. But the way you read it is, you're looking for anything red, right? High impact. And then this shows you the time, of course, right? And as long as you have it set to your time, which you just click on this and go and set it to your time in the settings, this tells you what time it comes out in the day. All right, so we got all that set. And then over here is just the most important. So let's take an example, like let's take this today, this trade balance, okay? So what this is saying is that on Sunday, and this is my time, right? On Sunday, December 18th at 4:50 p.m., there's going to be a trade balance like report or something of some sort. It's trade balance, whatever that means, for the yen, the Japanese yen, JPY. And it's low impact, meaning it's not really going to do anything. And it says the forecast last time, okay, or the forecast, what they're planning on the number being is 0.59T. We don't know what T means, maybe trillion, we'll see. Previous is 0.47T. And then the actual will not actually show up until it comes out. Okay, but you guys can see my time. It's 4:51, right? So it came out about an hour, it's 5:44. So it came out about an hour ago, this news. Now, if we want to learn more about this news, right, we can actually click on this little detail right here. And it doesn't actually say what the T is for, but it does say it measures the difference in value between imported and exported goods during the reported month. All right. So again, that's just kind of general. It basically is just telling us it just measures something for the economy. But what you're looking for is right here. If the usual effect, if the actual comes out, that's the greater than sign, right? So if the actual comes out greater than the forecast, then that's usually good for the currency. All right. So what does that mean? So that means if this number, that actual, right, whatever's in the actual column, comes out greater than the forecast, just like it says right here, greater, so it has to be bigger than 0.59, so 0.60 or 0.61, anything higher than that, that's good for the currency. All right, so what happened? Basically, like breaking this down, guys, right, it came out actual 0.54T, so that's a lower number, right? So that's you could just put this opposite. So usual effect is if the actual is less than the forecast, then it's bad for the currency. That's also what that means. All right. So that's bad, and that's why you see a red right there. So they kind of help you out. That's why I like this calendar a lot. So it shows you red because it's bad. All right. So that's how you guys read the calendar. And that's now the T. I honestly don't know what the T stands for. That might be like trillion or something like that. I don't really look at that. Like this is normally, you'll be usually looking at like percentages or things like that. But like this right here. So Thursday, 6:30 in the morning, my time, for the Canadian dollar core retail sales. It's high impact, so I obviously care about that. And then I just have this memorized. Remember, this is the forecast column. Okay, so everything here is forecasted for the week. Okay, you'll always be able to find that on Sundays or Mondays. And then this is the previous. So previous was 0%, so not very good for CAD, right? If you guys know about Canada's economy, like they always like overshoot and like they undershoot and overshoot and under deliver with their news for some reason, I've noticed. So you see that last month came in at 0%. This month it's forecasted to be 0.7%. And then this is going to say, obviously, of course, if the actual is better than the forecast, and that's good, right? Because core retail sales, what is that? Change in the total value of sales at the retail level, excluding automobiles. So if that's a high number, that's going to be, of course, good for the Canadian dollar. And we know that because it says actual is better than the forecast. That's good for the currency. That means just a high number is good for the currency, higher than the previous. So if this comes out as forecasted, then that is better than 0%. So it's better. Now, and remember, guys, always compare to the previous. Don't compare to the forecast, right? If it says, let me give you an example. If it says 0.7%, right? And let's say it comes out 0.6%. Now, remember that is still higher than the actual previous result. The forecast really doesn't mean anything at the end of the day. That's just a forecast, right? It doesn't mean anything. It's no numbers. It's nothing tangible, right? So even if this came out at like 0.6, yes, it's worse than the forecast, but it's still much better than the previous result. So I just want to throw that in there. Make sure you guys definitely understand that. Let's see. Kung Fu, you said you got the double top there. I'm assuming on the 1 hour. Let's see. Sorry, guys. Got that hotel connection right now. Hotel Wi-Fi. It's not very good right now. I'm actually at a nice hotel. I'm at the Aria also, so I don't know why the internet is so bad here. All right. USD Jappy though, guys. Double top. Where are we seeing the double top at? 4 hour maybe? I don't know. They're at the 15-minute. Let's see here. I don't really trade on the 15-minute because that can give you a lot of fake outs, but let's see. We'll see what it looks like. Maybe like if you're talking about right here. Well, here's the thing. Like when I'm looking at price, like that's going to be too far back. That structure would be too old for me and on too low of a time frame. You know, you can because we have this double top, and you know the trade. If remember, you have to trade in relationship to the time frame that you're looking at the trade on. That's very key. All right. So we don't want to be like targeting all these pips or even all these pips, you know, just because we saw a double top back in here. If you were to have the opportunity would have been this short right here. You know, seeing the confirmation on the double top, seeing those two red bearish candles, right? Something like that, and then catching the sell down. Because we're working with this on the 15-minute time frame. So we're going to look for, you know, that's still 50 pips. Actually, more than 50 pips. Right? So to target 50 pips on the 15-minute time frame, that's a very, you know, good risk to reward. So that would have been the trade back there. So I wouldn't say it wouldn't influence my decision to short. You know, of course, you know, we even have this kind of double bottom forming right here, and we want price to get down here. So of course you can definitely scalp. You know, if it breaks here, comes up to retest, sell down, you definitely can 100%. But is the risk to reward worth it? Maybe not. All right, but if it makes sense, it makes sense, right? I'm just choosing to be more conservative, wait for a pullback, and then continue trading with the trend. All right, guys, that about wraps it up. I think I went through every pair, gave you guys some pretty clear analysis on everything. I'm excited to get into this week. This is pretty much the last full trading week of the year. I don't know if you guys can see my calendar pulled up, but you know, basically next Sunday when the markets open, markets won't, they'll open, but U.S. banks will be closed because of Christmas. And then we have New Year's and everything coming up. So it's going to be the liquidity in the markets is going to be very low. We aren't going to see like some huge moves, but we are going to take advantage of the situation, guys. We're going to take advantage of this last 2 weeks basically of the year and make as many pips possible, finish this month and year out as good as possible. But actually 6 days ago too, we just had our 6 months in business. So June 12th is when I started the first Telegram with Positive Traders, guys. So we've been doing this for 6 months. So it's just that persistency and moving forward, right? So it doesn't look like anybody has any other questions, maybe. Awesome. All right. No questions, guys. Jonathan, thank you. I appreciate it. Congrats. You said thank you. Awesome. Yeah, man. Go team for sure, guys. Let's continue. You know, let's get let's keep everybody, everybody motivated and happy, guys. It should always be, just pushing, guys. Peter, you just asked average stop loss. On a swing trade, the average stop loss is going to be about 100 or so pips, maybe 100 to 120. And just like a normal like position trade, we're looking at like between 40 and 60 pips, and a scalp, we're looking at like 20 pip stop loss. Remember the big key thing, guys, is your stop loss really doesn't matter at the end of the day. I mean, let me say it the other way. As long as you're risking 2%. What I mean by that, guys, I meant to say like it doesn't matter if you have a 25 pip stop loss or a 100 pip stop loss. If you're still risking 2% every time, then it's the same thing, right? So I wouldn't when you guys are formulating your trading plan, I wouldn't say, I wouldn't go in and have the mentality of like, every trade is a 25 pip or every trade is 30, you know, because the market is evolving and changing every day, right? Sometimes you're going to have, you know, a 60, 80 pip stop loss. Other times it's going to call for a 15 or 20 pip stop loss. But, you know, if you're trying to risk, you know, 1% of your account with 15 pips, you know, you're going to be trading a different lot size than you would with, you know, 60 pips. And the way you guys do that, I'll just show you guys. I know that there's people already leaving, but I just want to show you guys this real quick. Is this position size calculator. You come here. Okay, you guys can Google this too. Just Google Forex position size calculator or Forex lot size calculator, whatever, or go to my FX book, you know, copy the link, screenshot it, whatever. But this thing is so useful, guys. This thing is great. I still use this to this day, but like, let's use an account balance. Let's say you have like $2,000 invested. All right. Let's say you want to put 2% risk on a trade. All right. And then this is the beauty of it. Like, let's pick any pair. Let's say Euro USD, right? Let's say the stop loss. So this is what I mean is you can always risk the same percentage, but you just change your lot size according to the stop loss. So like a 30 pip stop loss, I think is like 6, or I'm sorry, the lot size is 0.13. All right. So, but then you can still trade with like 100 pip stop loss. All right. So that's the beauty of it. Some people think like when they see a giant stop loss on a trade, they're like, oh my gosh, I have to use, you know, I'm going to go in so much drawdown. Well, you just change your stop loss according. So you would go in the same amount of drawdown that you would with a bigger lot size on a smaller stop loss. So that's the beauty of risk management. Let's see. So Kung Fu, you asked, what would you recommend to do if you start a $40 account with $100 to $300 leverage? It's definitely a micro account with XM. What to do to get the best out of the setup? Well, you know, that's really up to you, my man. I mean, I'll just say this is like what I say to everybody. This is what I like recommend to my whole team, the whole Positive Traders team. This is just what I recommend. I think I even have it on my website of just what I recommend. Basically, if I could go back in time starting as a new trader, if, you know, I don't know where your situation is, if you're like just jumping in new or you've been practicing for a while, but I would never, ever, ever fund a live account without being profitable on a demo account first, just period. You know, without 3 to 6 months of solid experience on a demo account, learning that, you know, basically the market movements, understanding how they change on a daily basis, weekly basis, monthly basis, and really just learning all of that before you even touch real money, you'll save yourself so much in the long run. Even if you're a part of a group or you're having somebody to train you or you're doing whatever, you're beating the learning curve by doing that. And, you know, I always compare like learning Forex to going to college. You know, people pay thousands, tens of thousands of dollars to go to college to learn a skill that can make them, you know, like $60, $70, $80,000 a year. You know, if you're lucky, maybe 6 figures a year. But, you know, Forex, you can literally make unlimited amounts of money. And you can find mentors like myself or other people out there that, you know, charge you minuscule amounts, and your learning curve is cut by so much just by having somebody that can kind of like tell you these things, you know, the good things to do, the bad things to do, what's right and what's wrong from their previous experiences. Peter, the premium group, it's $69 a month. And you guys can learn more on my website. It's positivetraders.us. I'll put it in right now. So Kung Fu, that's what I recommend. So 3 to 6 months of a demo account. But if you're already at that stage, you've already gone through the demo account, you're already profitable on a demo account, and you're ready, and you want to start with $40 and you're ready to invest, then you know, always 2%. You know, you just use this. And sometimes you're just going to have to sit out on a trade, right? Because if your account size is too low, like don't risk more just so you can make a trade, right? If your account size is too low and the lot size is too low down here, then just continue to save your money, right? So let's say you wanted to do like a 30 pip stop loss of $40 and you wanted to risk 2% on Euro USD. See, it's saying 0.003. So you can't even really, well, I think with a micro account, you might be able to do like a 0.01, which would be like a tenth of a standard account. So that you might be able to do something like that, but you can see what I mean. It's a very small lot size already. So I would recommend, you know, build your equity up a little bit more. You know, if any, you know, I'd say people to start with $500, $1,000, you know, at least something, sizable. And I know not everybody can, but so just work with what you can, but don't start investing like little amounts, because what's going to happen is if you invest little amounts of money in the very beginning and you're just trying to like basically flip your account and you haven't gone through the experience of months and months of experience on a demo account or what have you, then you're just going to, it's inevitable, guys. It's what happens to 95% of people. They just keep funding. You'll fund an account with $40, blow it, fund an account with $60, blow it, $100, blow it. And then you'll keep going in a circle. And then eventually you'll say enough is enough. But then you'll be like, man, I lost all this money. And so, then you have to work on building your account to get back to even from where you started, when you could have just started on a demo account, built your equity, and then started trading, with that equity that you built up while you were learning. So that's my recommendation, guys. If you want to learn more about my premium group, though, positivetraders.us, just go here. This is my website, guys. You can learn more about it. And it tells you everything on here. Like if you guys want to learn about, sorry, my internet's pretty bad and the images on my website are pretty high quality. So this is the website, guys. You can come down and you can actually like learn more about it. If you guys want to learn about the trade copier, you can click on this. It tells you all about it. You can view our progress. It'll take you to our MyFX book. It's like a live feed of our of the trades that we have on there. You can see like an example of the signals that I give out. I give you like full analysis on every single signal. And yeah, that's that, guys. All right. Does anybody have any last questions before I jump off of here? I appreciate all of you guys coming on here. All right. Doesn't look like anybody has any other questions. All right. Well, this will be uploaded in YouTube within the next couple hours for you guys. We'll post the link in Slack and Telegram for you when you're ready. If any of you guys have any questions, feel free to message myself or Louie or Cal. But other than that, everybody have a very safe trading week. Remember, we are getting towards the end of the year. Markets can make some pretty weird moves. So keep your risk low. Don't be risking the bank, to try to flip your account or anything. Keep it low and chill. Really save your guys' equity to really go hard in 2017. Get what pips we can out over the next couple weeks, but let's really focus on our game plan on the next year and making everything, once the liquidity is back in the market, the trends are coming back just like they do every year, just hitting it hard next year, guys. But I'll catch you guys later. Have a great day, guys.